Assalamualaikum warahmatullah everyone. From the previous video, I have mentioned that the public were not happy about Islamic banking because the impact of the Islamic banking product onto consumer welfare has been disappointing, and many of the consumer group were beginning to echo or amplify, the downside of the Islamic banking business in view of the many examples provided by this consumer group. And of course, the main idea is the impact of the Islamic banking product offering on the consumer. And we see that the product, the debt financing product under the contract of Murabaha or Tawaru, they seems to be very similar to conventional loan. Not in terms of the contract. Of course, the contract were declared as Sharia compliant by the Sharia authority because they don't contain riba or gharar or maisir or pork or alcohol. But then when it comes to the economic impact, such as the fate of the borrower, fate of the consumer when he or she came into default, when they are trying to settle their debt early, they saw that they have to pay much more than what was expected, because in the rule of 78, most of the monthly payment were allocated as bank profit and very little for the principal payment. At the end of the day, when someone intended to settle early due to some genuine reason, he or she found that there's a lot more to settle compared to what was paid. And many more issues raised by the consumer. The charging of profit, based on Rule 78, based on the flat rate method, the compounding of profit rate during the moratorium, and even now we can see the confusion between the ceiling rate and the effective profit rate. So many of the consumers were complaining that the contract price, the sale price is much higher. The ceiling rate, which is used as the contract rate, is very much higher than the prevailing market rate. Even though we know that the consumer are paying their debt based on the effective profit rate, which is much lower than the ceiling rate, but at the end of the day, consumer are not happy, and they may accuse the Islamic bank of charging a much higher rate compared to conventional. So the Islamic bank must try to explain this clearly to the consumer before anything disappointing can happen. So this particular similarity between Islamic product and conventional product, the impact or the effect of this Islamic product were similar to the conventional product. So many of these observers were saying that Islamic bank are backdoor riba banks, or they are lying, they are not telling the truth. The Islamic bank are not Islamic bank at all. So we do not want this view to be seen as something that is extreme, because these are in fact realistic criticism of the Islamic bank, and Islamic bank must wake up and do something in order to make their image more acceptable to the public. And one of the critics of Islamic banking is the fact that they participated in the fractional reserve banking. And I have mentioned earlier in the previous video regarding how the fractional reserve banking will impact the economy or the overall economic activity. And I've said here that the fractional reserve banking is not something new. It is very well found in any book of economics. And the reserve, the term reserve is actually cash. Reserve is a technical term to mean cash. So fractional reserve banking is the fact that the commercial bank are required to keep a fraction of their cash holding as cash, as a reserve that cannot yield any kind of return. And that will be let's say 5% in step 2, for example. When the bank acquire a deposit of 100 billion, if the reserve requirement is at 5%, so the bank will have to keep 5% of their deposit as cash, and that would be 5 billion. And the rest of the reserve would be converted into interest-bearing asset, such as loan and security, so that the bank is able to earn profit, based on the making of loan and the investment in security, and that will be about 6.75 billion. But when we see this kind of transaction getting into banking operation, we will see that the impact of loan making is very, very serious to the economic is very serious to how it impacted economic activity, because when the rest of the reserve is used to make loan, this loan, as we see in the textbook, this loan will be deposited in their respective banking entity, and loan will be deposited into banks, and the bank will use this deposit to make another loan, and this loan will be deposited in another bank, and this bank will use the deposit to make new loans. And we can see that this creation of deposits over and over again would eventually end up in the creation of money, because money, as we see in economics and finance, money supply over here is equal to the sum of the currency supplied by the government and the deposits created by the bank. Right, so we can see here that bank use a fraction of the reserve of 100 billion, say 5 billion, to fulfill the statutory reserve requirement, and the rest of the cash reserve are converted into loans, for example 80 billion, and deposit creation is now initiated by virtue of the issuance of loans. And that deposit creation would be based on the size of the deposit multiplier. So for example, if we were to use what is the size of the new deposit created by the banking system. And as I said earlier, that the money creation or the money supply consists of the money created by the government, which is currency, fiat money, and money created by the banking system, the commercial banking system, which is the current deposit, the CASA deposit. And if we were to add FD, then we talk about M2. But we can see that the size of the deposit created by the bank is much, much higher than the size of the money created by the government. So the size of the money created by the commercial bank is 200 billion. How do we get that size of 200 billion? We can see that the new deposit created by the commercial bank, is equal to the formula that we will use to find the deposit multiplier. So we can see that the initial deposit of 100 billion, which is the helicopter money or the money issued by the government, 100 billion, divided by the 5%, which is the statutory reserve requirement, then 100 billion divided by 0.05, then we got the 2,000 billion, 2 trillion of money created by the commercial bank, right? So the total money supply available in the economy now is the currency of 100 billion plus the newly created money by the commercial bank of 200 billion, 2,000 billion. And this is why we are worried, because this power given to the commercial bank in money creation is so enormous, and it must be controlled. So government will come in to control the money supply issued by the private banks via monetary policy. So when there is inflation or when there's a recession, and the government through monetary policy will manipulate the interest rate so as to control the money supply, and that would be one of the so-called avenue how money created by the private banks are controlled by the monetary authorities. But then again, we can see that the very big departure from government-owned created money versus the money created by private company. Now the Islamic banks gets into the foray of FRB when it adopts the leverage banking model that is using leverage funds, that is deposits, to make murabaha financing. So this is how the Islamic bank came into the picture, and we will see that in the fractional reserve banking, when the Islamic bank make murabaha, using the deposit funds, new deposits, are created, hence new money supply. So this is again the Islamic bank is adopting the conventional banking leverage model, where they will use leverage fund or borrowed fund, that is deposit fund, to make the murabaha. Of course they don't use the capital fund to make murabaha like the conventional bank. They use the leverage fund to make the murabaha financing, and that is why without proper control, excessive money supply, from the conventional bank and from the Islamic bank raises the price level, that is inflation, which is bad for the economy, because inflation, it basically eats up the purchasing power of the consumer, of the people, and destroy money stored in the bank deposit. So this is why many of the critics of the Islamic bank were pointing to the fractional reserve banking as the factor that is causing the Islamic bank to behave like the conventional bank and to be responsible for inflation and hyperinflation. So we do not want the Islamic bank to be involved in this so-called activity that is against the Maqasid Sharia, because the Maqasid Sharia intends to protect al-mal, wealth, and when Islamic bank came into the FRB, they themselves are subahat, or they are involved in this destruction of property or destruction of wealth of the people. So this is something that the critics of Islamic banking, they were raising the fractional reserve banking as one of the culprit that must be controlled or must be abandoned altogether. Okay guys, we'll discuss some more later on in our videos. I see you again. Assalamualaikum warahmatullahi.